Hi guys, welcome to another video by Optionables. My name is Saket and in this video we are actually going to review today's position. So I am recording this video around 1:04 am in the morning, and this was necessary to do because today we actually had a loss, and it was important for me to actually show you the loss because by tomorrow morning what will happen is the positions which I have closed will not be seen. So today I was actually held up with some work in the evening and it went on till the late night, and I now got some time to make a quick video. So this video will be pretty short and I'll try to keep it pretty concise, right? So yesterday, if you remember, in the previous two videos we had discussed about the positions, right? So we had taken a position on Thursday, so we had initiated a position on last Thursday, and we had actually done one adjustment on Monday. On Tuesday we did not touch any position because the open interest didn't actually support any sort of adjustment. But today what happened is something really different. So today we saw a huge rally in market supported by open interest also. So I'll be quickly looking at the open interest first, and later I'll be telling you what exactly we did. Right. So first, starting with Nifty. So yesterday we saw that even though the market shot up slightly, there was more number of call writing. But today what you can see is that this rise in markets was supported by options also, so open interest also. So you saw that as the market started moving up, people started to close their call positions in 17,300, 350, 400 as well as 450. And we didn't even see some significant writing happening at 500. Whereas there were almost 12.4 million puts, that is almost 1.2 crore puts of additions which happened all across 17,500, 17,450 as well as 400. So that means there was lot of unwinding of calls and additions of put, which clearly meant that this move was really supported by open interest also. If you remember, this is the exact thing which we had discussed in the previous video also, right? And when you look at the open interest, a lot of calls and puts have been written at 17,500, and 17,500 short straddle will be an important level to watch out for. But looking at the current market sentiment, it won't be a surprise even if we see the market heading up further from here. So even with Bank Nifty, the case is something similar. We saw some call unwinding happening at 36,500, 600 as well as 700, whereas we didn't see a lot of put additions, but there were a lot of call unwinding. So even this suggested some sort of positive momentum in Bank Nifty also. So next comes the question, what exactly did we do with our position? So if you know our position, we had a short straddle at 36,500, and for Nifty we had done a 17,300 short straddle as well as 17,400 short straddle. So initially what happened is we did start adjusting some positions in the beginning itself. So we started shorting additional put options at 17,400, 17,450 and so on. So even with Bank Nifty, we started to short additional put options like 36,700 and so on. But there is a point beyond which there is no need of adjusting. So I keep mentioning this every now and then, that beyond a point there is no need of adjusting. Just come out of the position and close everything. So that is what we did today also. So if you look at this screenshot which I took around 11 o'clock, and market was at 17,443 and Bank Nifty was at 36,700, and it was coming closer to our break even. We had already short a lot of put options. So what you see here is I have come out of all the positions completely and I have done lot of adjustment, and I came out of all the positions at a profit of 12,000 M to M and an overall profit of 1,57,000 P&L, right? So the thing is, even though the market shot up, so in the beginning the market was almost around 70-80 points up when I closed down all the position, right? So in spite of that happening, I could still come out with a minimal profit of 12,000 rupees. So I am not telling it's a good profit, but what I'm trying to tell is that you didn't go under loss even though market had actually moved pretty far away from your break even. So where is 17,300 short straddle and where is 17,450? Almost 150 points away from your short straddle, and you were still able to give today also in profit, right? So the thing is, till here we actually booked in profits. So whatever loss you're seeing is because of the additional positions which we have taken today, and I'm going to explain what those are in just a couple of minutes. So I will again come to Sensibull. So one position what we have taken is a short straddle 36,700 23rd September. So you can see that we have a pretty wide break even on the lower side. On the upper side, tomorrow in case if we breach 37,000, then I'll be taking some additional positions. So till we breach 37,000, I won't be adjusting this trade, right? So once we cross 37,000, I will be making some adjustments. So this is the first short straddle which we have, and I'll be showing that to you right over here. So this is the first short straddle which we have in Bank Nifty, and you can see that this has already given us a loss of around 25,000, and we'll be quickly saving this strategy. So the next one what we have is a ratio spread, which I'll be showing you again. So here what we have done in this ratio spread is we have traded with 30th September options. So I have gone long on 36,000 call, that is right over here, and I have shorted 37,500 as well as 38,000 calls. So here I have shorted 80 lots of this, and I have shorted this 40 lots, and I have gone long on this 40 lots. So you can see this is how my break even is right now looking. So I expect some support to come in at 36,500. So that is where my break even is. And below this also, I don't have a huge loss. So on expiry day, my loss will be somewhere around 4 lakh. So, but obviously I'll be shorting some additional calls and trying to adjust this position, right? Apart from that, on the upside, 37,500 is where my maximum profit comes. So once we breach 37,500, I will start shorting additional puts to act as a counter to these calls. So this is the second trade what we have, that is the ratio spread in Bank Nifty. So then finally coming to Nifty. So this is our third trade. So totally there are 3 trades. Here we have done a double diagonal calendar spread. So what that means or how that actually looks like is something like this. So we have shorted 17,100 PE of next week as well as 17,700 PE of next week, each 80 lots. So this is our break even, right? Along with this, we have gone long on 18,000 CE, 80 lots, 16,900 PE of 30th September, 80 lots. So this is double diagonal calendar spread. Okay, sorry, this is 17,200 as well as this is 16,800. So sorry for that. So you can see right now that my break even is actually pretty low, and I am expecting some support to come in at 17,300, which means I can actually bring this up until 17,200 at least. So tomorrow, based on how the market behaves, I will be considering adjusting this position and bringing my puts closer in. So apart from that, if the market actually ends up trading around this range itself, then I'll be ending with a profit of around 2 lakh by next week. So this is one of the positions which we are holding. So the same position has been replicated for 30th as well as 7th October position. But the thing is, since that can't be shown here, so I'll be adding that later on. But a similar position has been replicated. So these are the current positions which we are holding. We'll be seeing how exactly we can adjust as we move ahead in this particular week, right? So with that, we also come to the end of this quick video. So I just wanted to give you an update regarding what exactly happened with our trade. So as you saw that initially, even though the market actually gapped up, we were still in profits, and that's the advantage of shorting options. And even though there is some amount of overnight risk, a small gap up of 50-100 points won't actually bother you much, right? So now since the market is little more bullish, so we will have to see how exactly we can manage these positions moving forward. So one easiest option would be just to come in closer with the puts. For example, if I go in closer, say 17,500 puts, you can see the break even on the upside also tends to expand, right? So something similar we can actually try to bring in. So this way you have multiple options on what exactly you can do to adjust this particular position, and we'll be looking at the same as the market approaches our break even, right? So I hope that you have got to learn something from this video and you like this video also. So I wish I could have posted this earlier, but since I was held up with the work, I couldn't record this video at all. And since the market had moved and today we had a loss of 47,000, I thought it was necessary for me to show this to you guys, because it is usually that the loss making days teach us more lesson than the profit making ones. So today was a loss making day and we have learned some lessons. That is, one is it's good that we came out of the position early. If not, so here when I open net position book, whatever M to M you see, that is what I have saved by closing in the positions early. So if I hadn't closed these positions, I would be at a 2 lakh rupee loss. So it's not just 44,000 plus 2 more lakh, because just by closing this position early, so this is the total M to M what I have saved. It is showing as a profit because I have exited the position. I am looking at day wise, right? So this is one more thing which I wanted to show. And with that, we also come to the end of this particular video. And I hope that you have liked the content and you have got something to learn from this. So please do show your support by hitting the like button, sharing this video, as well as subscribing to our channel. Thank you so much for joining, guys, and I'll be catching you soon in the next video. So most likely Monday will be going live on YouTube and doing some intraday trades. See you guys soon. Thank you.